There's a lot of methods to increase your win rate in your trading. Today, I'm going to show you guys one very simple method you guys can integrate in probably two different ways. And it's called confluence. If you haven't heard of it, definitely tune in. And even if you have and know very well how confluence works, I'm sure these two methods will additionally help with honestly whatever trading strategy you're currently using. You can definitely find a method to help. So it's a very versatile tool, this idea of confluence. So without further ado, let's jump into it. All right, guys, over the next couple minutes, I'm going to show you guys exactly how I use confluence in my strategy. And then I'm also going to show you another tool or resource you can use with a similar idea to integrate into your strategy if you don't like the way I use it. And just real quick, if you guys are not familiar, confluence is the idea of, let's say, having a high probability strategy and then taking a piece of another strategy or a tool or an indicator or some other trading resource and integrating that into your existing strategy to increase the probability of having a successful trade or successful strategy. So if you say, hey, I trade this system, it has an 80% win rate, well, you add this additional tool to it to where you only take a trade when not just your existing strategy tells you to, but also this tool, you're integrating that in, and then it can increase your win rate, let's say from 80 to 85% or something like that. And typically confluence is more of a simple idea and how it's actually applied than like taking two complex strategies and putting them together, because there may never present an entry point if you have two extremely complex strategies that both need to be aligned at the exact same time. This is more of a broader idea or broader concept, okay? So I'm going to explain to you guys really quick how I apply confluence in my strategy. So for those of you who may not know, I'm a range trader. So what I mean by that is, if we're looking at like trend or price structure, right? So you see like an uptrend and you identify higher highs, higher lows. If you're more interested in my actual strategy, I have a video on that you guys can check out, but I'm just going to brush over this real quick. I'm more keying off the ranges in price, okay? So identifying, swing highs and swing lows and then kind of trading this trend in between that can seem kind of complicated, but it's not that complicated. I kind of go over exactly how I identify those sort of things, but that's generally the idea of how I trade. I trade price action basically, and if I was just trading that solely, my chart would literally be completely blank with just candlesticks on it. That's it. But you see these two lines here. A lot of you guys know probably what that is, and I'll show you guys how exactly I apply that. Okay, so that's my strategy. So real quick, before we talk about exactly what it is, let me show you guys how I would possibly take a trade. So like if I'm looking at a range, technically I'm really keying off the opening range and things like that. I identify the candle high, candle low. Again, if you're really interested in this, you can check it out in one of my prior videos. As soon as I see price break over, that could signal an entry point if I'm just looking off of range, price action, and strategy. And in this situation, this trade would have played out really well. We see about 25 minutes of price moving up. This is the 5-minute chart. So we see about 25 minutes of price moving up. Pretty simple stuff. Obviously my strategy is not that simple, but this is kind of a Cliff Notes version of that. We see this kind of immediate trend to the upside. And I picked an example of what we're seeing here as something where, in a day like this, where confluence really is important. And you guys will see why. So in this initial trade, it would have played out well, okay? So, but in the reality of how I'm actually executing on my trade, I have a simple addition to my strategy that increases my win rate. Kind of, if you think about it, guys, like the way I would describe it is it's less about maybe finding more wins in a way, and it's more about avoiding bad trades. And I know that sounds kind of weird, but it's kind of a mindset I put myself in. Is like the confluence helps me avoid bad trades, where if I have less bad trades, I have more winning trades, which increase my win rate. But for some reason, a lot of new traders just focus on like, how can I take more trades and win more trades, instead of saying, well, how do I avoid bad trades? That's more of how I focus on my confluence. And I'll show you numerous examples where even in this situation what we're looking at, it helps me avoid the bad possible trades on a day like this, where we see price trend up, right? But there's a lot of kind of like booby traps for, traders throughout this day. I'm sure you can tell, and I'll show you kind of how I avoid those. So the first trade I showed you guys would look something like this, and based on my confluence, it's still a tradable outcome. This is something that looks really good, and because the confluence I look for is EMA crosses. So the two EMAs I have on this chart are the 20 and 50. EMAs are exponential moving averages. Okay, it's the average price over a period of time. All right, and what I look for in particular is the crosses. So when the 20 crosses over the 50, that would be considered a bullish uptrend. And when the 20 crosses under the 50, that would be considered a bearish downtrend. Now, where I see a lot of traders go wrong with EMA trading is they're just trading off of EMAs. I think EMAs are less of a strategy and they're more of an aspect of confluence. It's a really simple way to identify trend. I mean, if you really think about it, guys, like I kind of tell all the traders I work with, like EMAs kind of tell you where the trend is going seriously based off just like where they're pointing. And I know that sounds weird, but like if the EMAs are pointing up and current price, is where it is, like trend is up. I know that sounds weird, but so with the confluence aspect, really simply, if the 20 is over the 50, I am only looking for upside trades. So I'm only looking to trade upward. That's it. I'm not looking to trade downward. So what you guys can see is at no point from market open here to market close here was I looking at anything but an upward trade. Okay, so that is going to eliminate all of these downward moves really for my kind of trading opportunity. Okay, so when you are trading in what some would consider a choppy market, right, or a choppy day, right? Some traders always hear complaining about, oh, today was choppy. It's usually because you're kind of getting whipsawed around, up and down, because you're looking for opportunities in both directions. If you can identify a strong probability of price to move through the day, it helps eliminate a lot of the noise in the market, what I mean by these downward moves. And I'll show you, like, okay, we see price break to the upside based on this range. We see the EMAs showing long, so I'm only looking for an upside trade. So this checks all the boxes. I take this trade, okay, I make some profit. We see price move up over the next 20, 25 minutes. That's great, okay? Now, let's imagine, okay, I'm still looking at a range, and again, I'm not going to go into heavy detail, but like with my strategy, like if we see, right, that was a range, then we see a trend, and then we're kind of like here at a period of time, right? So we see our high, our low, our higher high, higher low, and we're kind of trading in between. We know what happens. We know price rolls over. But my point is like if I'm trading a range, right, I'll say, okay, well, we have our high and low here, and we're kind of setting up, and that may look like this, right? So if we're looking like this, and we're seeing price set up like this, I'm only looking for price to break out again and move to the upside for an upward trade. Okay, that's all I'm looking for. If price breaks below in a normal kind of range strategy, you're generally taking it both ways. I have no problem trading to the downside, but I do have a problem when my EMAs are pointing up. So in this situation, we actually see price push down, break below. It even breaks below the opening price. Like by all means, looks pretty doggone bearish. I mean, depends, exactly what your strategy is or what your trading is. But like, I don't know, a lot of traders I know like trading trend lines and stuff. Like trend line break, like this looks generally bearish. We see aggressive downward pressure. I'm not going to take it. We have the EMA still pointing up. We have the EMA still cross to the upside. We do see the EMA starting to point down, but that's normal because we see price down. So I'm not going to take this trade. I'm going to watch. I'm going to wait. Okay, and we start to see price rally back. Completely rally back, completely change the narrative. Okay, and what I might do is I may establish that, hey, okay, this is my new low. We have our high, we have our low, we see price trading between. And there's still opportunity throughout the day. There's another opportunity as price pushes up again for the next, 20, 25 minutes. And the funny thing is on top of that, like let's say, okay, here's my entry. We see how close price respects that level that's created off of our range, right? So it's holding our range. And then, we don't have an insanely huge push-up, but we do see a really nice push-up. Again, over 20, 25 minutes, price pushes up. Okay, and the confluence is what saved us. That cross to the upside, price moving up. We did not take a trade to the downside where we chase this, I don't even want to call it extended move, but that big push down. We're not chasing it. We're letting it set up properly. It actually reverses, and then price pushes up and breaks to the upside and keeps going there for a period of time. So, of that whole move, we're looking at something like this. Pretty nice move. So, at what could have been, let's say, 3 trade opportunities, the confluence aspect of only trading directionally with the EMAs saved us from a bad trade, and then we had back-to-back good trades. We had a good trade in the morning here. We avoided this bad false signal, false breakout, whatever you want to call it. And then we were able to trade again on this quote-unquote third setup, you could call it. Good. Okay? All right. I'm going to brush over real quick another aspect, and I encourage you to backtest this, guys. I encourage you to backtest the EMA strategy. The problem is if you go online and you look up EMA strategy, all you're going to find is like bounce plays off of EMAs. So what I mean by that is like you're just going to see people who are like trying to buy dips on like the 20 EMA or buy rejections off the 20 EMA and stuff like that. And sometimes they work, sometimes they don't. But you're going to try to see like people trying to buy or sell off bounces or rejections off EMAs. You're going to try to see or find stuff like that. Or you're going to find people solely just trading off the cross. And just crossing, honestly, sometimes isn't bad, but it can be late sometimes as well. Like here's a really good cross, and then we see price move to the upside. Crossing can be nice, but it's not the end-all be-all because, in examples like this, you kind of see cross down, cross up, cross down, but that's where your confluence comes into play, where you have the opening range, which is kind of avoiding you from taking a bad trade, right? So your opening range may look something like this. Okay, and then you see all this crossing happening. You're not trading just off the crossing, and you're not just trading off the opening range breakout until the EMAs cross to the upside, and then price also breaks out at the same time, and you have this really nice trade set up right through here. You have this really nice, 15, 20 minutes of price moving up. So, what I encourage you guys to do is backtest the EMA strategy. And the EMA strategy, the beauty of it is a lot of times it can be applied to honestly almost whatever strategy you're currently using. Whether it's fair value gaps, opening range breakout, or just range break, Darvas box, whatever it is, you can apply it to the strategy you're generally using. All right, and then the last aspect of confluence I want to show you guys is similar to EMAs. But you guys may like this one a little bit better. It's actually the whole suite indicator. This one is on TradingView. And this one is generally the same idea of EMAs to a certain degree. It is a little bit different. But basically, it's the same concept. That you're only looking to take trades to the upside when the trend is green, the trend is up, and only looking to take downside when the trend is red. The problem is the whole suite is a little more, let's call it aggressive than the EMAs. So it's going to show you signals faster. Okay, now you might like that, you might not. The way I like it is I like to be more conservative in my trading. I like those slower EMAs. They help me avoid taking bad trades. The pro of that is I take less bad trades. The con of that is I miss more good trades, possibly. I can miss more of the good trades. The whole suite is kind of the inverse of that. It's more aggressive, it's quicker, it's snappier. You're going to have, again, double false signal. So maybe you have false signal in the strategy you're using, and then also with the confluence. But the benefit of that is you're going to have more opportunities, more trades. Now, on the flip side of that, if you go to the settings here, you can adjust the length and the length multiplier. You can even adjust the multiplier. But like if I bring this up to, like, let's say 75, we can see that it eliminates more of those false signals and kind of thins price out. And we can see that we have much more like smoother sort of opportunities. So like a great example here is like, if you were looking at like this is a range right here, like this is like after hours. Like if you're looking at a range like this, you do have a breakdown on the range where price is breaking below the range, and then we see green trend, and then actually price. So we know we're not taking this trade. We don't have the confluence. We have mixed signals. We're waiting. Price comes up, breaks over. We also have green trend, and then boom, price basically, shoots up, super aggressive. So we're avoiding, in this example, using that whole suite, we're avoiding this trade, that bad signal downward trade. We're taking the good signal, and boom, we see which one actually sticks, right? Which one actually plays out and plays out well. So that's it here, guys. Just as a quick reminder, in this video description below, I'll put a link to where you can schedule a one-on-one directly with me. What we'll cover is we'll cover blind spots in your trading. We'll also cover aspects of my strategy. I'll also answer any questions you guys got for me. You can schedule a one-on-one call directly with me with the link in my bio, and we'll cover everything trading. Any questions you got, or if you got no questions, I'll cover aspects of my strategy, and we'll talk about things you may struggle with and need help with. So go ahead, book that call, and until next time, I'll see you guys later. Peace.